Now, Safari Investments has assets valued at about 1.3 billion rand, and it plans to list on the JSE next month. Francois Marais is CEO of Safari Investments, and he joins us for more. Good afternoon to you, Francois. Always good to hear of a new listing, but before we talk of the listing itself, tell us about Safari Investments, where it comes from, how you came to be the chief executive, and give us the flavour of the company.
Thank you for the opportunity. We're a Pretoria-based company. The portfolio comprises 4 retail centres. We are only in the retail market, and we intend to list on the REIT section of the JSE.
Mm-hmm.
We started the company in 2000, and the first centre we built. Our centres are primarily in the previously disadvantaged areas. There's one in Mamelodi, one in Atteridgeville, and one in Sebokeng. And they are very good performing centres. We started this in 2000 with the first in Mamelodi. We also have a centre in Heidelberg, which is a later acquisition, but an older centre which belonged to a parent company of us. Mm-hmm. The centres perform well. Our trading densities vary from 28, 29 and 33,000 a square metre per year.
Give me an idea of where that fits.
That fits.
Is that good or bad? Very good.
That's exceptionally good.
Yeah.
It's 35 to 50% above the national averages, which is by performance good. We've got no vacancies. Our average rental is 105 rand a square metre, which is very favourable for future growth, insofar that the national average is around 160 to 170 rand. So we've got a built-in, seen from our point of view, we've got a built-in potential growth of around 50%. If you look at it from the other side, it's we're 30% below the market average. So obviously from that point of view, it's very nice. We are also busy with the current portfolio size, 125,000 square metres. We're busy with a further 25,000 square metres of further development, which is currently on the way. We've got another further development in Namibia, which is another 20,000 square metres. So we anticipate to grow the company in the next 2 years by about 40%, which will take it around the 2 billion mark. Then we've got further acquisitions that we're busy with, which will then, beyond that, will take it hopefully fairly quickly to the 3 billion mark.
What's the principle or principles that are guiding you? Because it sounds like a lot of activity, a lot of growth. So you need to be clear on what you're trying to do.
We primarily focus on retail development. We love it. Retail development is a very predictable type of environment to be in. If you manage it well, which we do ourselves, we've got a sister company that does the management for us, and they do it extremely well. You can see it in the fact that we've got a 0 vacancy factor. But it's an area, if you know your tenants and you see that they're carefully looked after, and you look after your public, then obviously it's a good environment to be in. We look at our public, we listen to them, we go for shopper surveys every 2 years at the maximum, sometimes every year, and we hear what they ask.
Okay, let's talk about the listing itself. It sounds like you are growing quickly and you need to get some capital, raise some money to help you do that growth. Yeah. And what level are you going to go in at? What are you hoping to raise?
We're not raising so much. The current gearing of the company is 30% debt. We have a very comfortable bond with Absa Bank, but we intend to, after the listing, to be with a 4 to 5% gearing. We want to get in the market 320 million roughly. That's our aim. And for the potential investors, the yield on that, the yield on the share will be around 9% mark. So we will be starting well. But it's essentially an aim to get a cash-paid portfolio afterwards, in any case, an income-producing part of it. And then in further acquisitions, further developments, essentially our development takes the form of organic development. We develop ourselves. We are from the industry, we are industry-driven. That's the nature of our board also. But we will keep the principle of basically a cash type of environment. We will probably do a further share issue in about 2016, 2017, when we'll have a bond of another 30% by then, but then we want to again do a further share issue.
Be a different kind of world. Once you're listed, you've got all sorts of obligations, rules that you've got to apply. Suddenly you find yourself spending money on things that you didn't have to before, designated advisors and things like that. And of course you yourself and your executives need to be more public. You're happy about that?
Well, it's a new it's a new world, and we will certainly look at it. We don't get a fright easily, you know, we're used to that sort of stress in the way we work and the way we work. So, but it'll be a challenge in itself and certainly something to look forward to. Yeah.
Interesting. And the date of the new listing proposed?
In all likelihood around the 18th of March. In any case, the second half of March.
Well, we'll keep a lookout for that. As I say, always interesting and exciting to have a new listing on the exchange. That was Francois Marais, CEO of Safari Investments.